And for those who are new, in the big blue button, on your left-hand side, there is somewhere you can write, like where Gitao has written, or where I'm currently writing. You can see John Kinuthia writing. So that's you can use that platform. Maybe if you can't hear me, you can write on that so that I check. If you want some clarification, you can still use that particular section. Also, yeah, and also you can also turn on your mic so that maybe you can give your views. So for those whose mics are on, please mute them so that we can start our session. Thank you, Lorna. I can see you've muted it. Okay. James, yours is still on. Faith, yours is still on. So mute the mic. Anytime you want to speak, I'll see it and I'll pause, allow you to. So please mute your mic. Or I do it on my side. Let me mute it on my. Okay, we can now start. From our last session, that is the topic number 1, that is introduction to auditing. I remember we defined what auditing is, but because quite a number of you were not there, allow me to go through it briefly. And I say that auditing is an independent examination of financial information of an entity, whether profit-oriented or not, and irrespective of its size, by an independent person known as an auditor, with a view of giving a fair and true view of organization financial status. So I remember in our last session, I said that when we talk of auditing, we say that it's an independent examination or independent investigation on a company's or an organization's books of account. And this one is done by an independent person. And when we talk of an independent person, we are talking of a person who does not have interest in the learning of an organization. We cannot have the employees of the organization auditing the same work they do. So that's when we talk of having an independent person. And like any other thing in business, there is an objective that is to be achieved by this independent person whom we have referred to as an auditor. This person called an auditor or referred to as an auditor does the investigation or investigates into the books of accounts of an organization with an aim of giving an independent opinion. On the true and fair view of an organization. An auditor is like a surgeon in the medical fraternity. An auditor, just like the surgeon dissects or does a surgery on a sick person, maybe to see what could be wrong with the body of that particular sick person. An auditor looks into detail into an organization financial status or books of account, and at the end he gives a status, he gives an opinion on how the organization is. So that's when we talk of auditing. You note it is an independent investigation done by an independent person with a view of giving a true and fair view of an organization financial status. So note that. Keep that note. Okay. Um, the other thing that we had looked at, other than the definition, we say that the auditor comes in to strengthen the agency relationship that exists in an organization. And I'll explain what the agency relationship. And we say that with agency relationship, this is where someone acts on behalf of someone. Okay, a minute. Hello. Yes. 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 Just be fast. I'm online. Yes. Only for that, it is still some of you who are still inquiring on how to join. So I was saying that with the agency relationship, we say that sometimes in a business organization, the owners of the business, such as the shareholders, the partners, the sole proprietor, usually appoint managers to run the business on their behalf. And therefore, a relationship is created between this particular business owner or the owner of the business and the manager. Such a relationship that comes into place is called the agency relations. And because it is someone who is managing business on behalf of another person, the auditor comes in to help the shareholders to know whether, through the agency relationship that has been created, whether the whether the managers are operating the business as per the expectation of the shareholders or as per their expectation. So that's when we talk of the agency relationship. And I explained how audit comes into place when it comes to that. Now, we also looked at the purpose of audit, and we asked, I remember, we trying to answer the question, is then auditing necessary? And I remember I said, yes, audit is very important. Number one of the purpose of auditing is to give a fair view of the organization status to the shareholders and other users of accounting information or auditing information. So when auditing is done, it gives one an overview good morning. Sorry for that hitch. It was an internet hitch. It's my hope that I am audible on your side. Faith, can you hear me? Let me just do a random check. Faith, Faith, Mercy, can you hear me? Mercy Wanza, Madhagu, Madhagu, unmute your mic. Mercy, can you hear me?
Yes, I can hear you.
Okay, so I wanted to confirm that because I had been disconnected because of yes, I can see even Itao Kimumbu can hear me. So I was talking of the purpose of conducting audit, and we said number one is to give uh, um, a fair view of how the organization is like in terms of its performance. Another reason why auditing is done it's to prevent errors and misstatement as well as frowned in the accounting process. Like for example, when an audit, when an accountant knows that someone will come to audit his or her work or to check what he or she has been doing, they will be doing it with a lot of caution. So auditing usually helps to minimize the errors that could be done by the workers or the accountant when they are preparing the accounting information. Another reason why the auditing can be done is to reveal or to disclose all relevant information concerning an organization. Yes, when auditing is done, it conceals any information or all the information pertaining a certain business. The other one is to provide uh, other services, other accounting services, what I remember we called off in the other class, spin-off effects and services, such as taxation, management consultation, among others. So that's what we talked of in terms of the purposes of having an auditing. Then we also went to the advantages and disadvantages of auditing. We can start with the advantages of audit. Number one is that it provides assurance and credibility to the account for the benefit of potential investors. I remember saying that whatever an auditor does, it is taken like a gospel truth. So most of individuals usually believe the statements of um, the auditor. So at any given point, when an auditor gives his or her opinion, people believe in it, and therefore one of the advantages is that when the auditors have looked at the books of account, they give some credibility to those books of account, so that investors or people who want to invest in a business can have some assurance that the books have been prepared well and the position that has been explained is the true position, the true and fair view of the organization. The other one is that it is used for detection of errors and frauds, which could lead to failure of the organization. Yes, auditing helps in detection of possible errors and frauds, which can be detrimental to the growth of the organization. So that is another advantage. It will help to detect the errors and frowns. And these errors and frowns once they are detected, prevented from maybe affecting the organization activity. The other one is that the audited accounts can be used by the organization to raise finance from public and other sources. Most when an organization is looking for finances from banks, from and from any source, they usually take or present what we refer to as audited statements. So the audited statements by an auditor can be used to give to source some finances from the organization. Another advantage of auditing is that it is used to boost the morale of accounting staff who keep the accounts records to date and act as a source of management information upon which decision can be made. Yes, very true. Monsieur Cafe, you've turned to be a blacksmith. Okay. Let's have muted her so the noise will not distract us. So we are saying that when auditing has been done, it will boost the morale of accounting staff as well as being useful for decision-making process. So when we talk of boosting the morale of the accounting staff, these are people who prepare accounting information. If at any given point, the third party who is an auditor gives a clean bill of health on this accounting on their work or the accounting information presented to them, so the auditor feels appreciated or sees that he's doing his or her work well or as expected. So that's when we talk of it boosts the morale. Then also another advantage is that it can be used by income tax authority, like in Kenya, the KRA, to ascertain the tax liability. So audited information can be used in case of tax disputes. You know, some in some times or in some cases, the KRA or the tax authorities may have disputes with the taxpayers, and when this occurs, the taxpayers will present to the taxpayer the audited statements as a true and fair view of how the organization is doing its business. So that is another advantage of it. The other one is that it can also be used to admit partners in the partnership business. Yes, the partners, whenever they want to join any partnership business, and this does not only apply for the partnership, even for the shareholders. When they want to join a business, they will ask for audited statements of the business. And when these statements would be presented to them, they will make a decision on whether to join or not, based on the statements that they have been provided with. So those are the advantages of the auditing. And let's now look at the disadvantages. Number one is if yes, when auditing is being done, the auditor must be paid. some fee called the auditing fee, and it's not a small amount of money. So, like for small businesses, it is usually hard to raise those auditing fees. So that's one of the disadvantage of auditing. It is an expensive operation for the business owners. Now, the other disadvantage of auditing is that if the report arising out of the audit is bad, it can lead to failure of the business. Yes. When at the end of this unit, we shall be looking at some types of the reports that can be generated for auditing purposes. And at times there we shall come sometimes they when the reports are generated, they are negative, in that meaning that they they may tint the image of the organization. So if an auditor gives a negative information report, it may tint the image of the organization, leading to the failure of the organization. So a negative report may tint the image of an organization, thus causing its failure. The other disadvantage is that an audit may not, in most cases, be in the interest of the owner, especially if they are managers in which case they may end up frustrating the entire process. So sometimes the managers may sabotage the audit process uh, by one frustrating the auditor, or maybe not providing the auditor with the required finances or resources. And when this one happens, the audit report that will be presented, it will not approve a true representation of what the organization is like, and therefore it may not present to the owners of the business with the true uh, uh, position of the organization. So that's when we talk of that. So those are the disadvantages of auditing, and that is it. So that's a good recap of the auditing and what we looked at in our last session. So I will now allow anyone who has a query or a question maybe to raise it out before we go to topic number 2. That was just a recap of what we covered last week. Anybody with a question? Yes, you can unmute your mic. Karen Joki Ile. Karen Joki?
Yes.
It's not a question. Anyone with
Yes.
questions? Karen, do you have a question? Yes. Do you have a question or a comment? Yeah. Yes, Karen.
No, just a comment.
Yes,
The
just
discussion is a
proceed.
bit understandable.
Okay.
Yes.
Thank you. Okay. Anyone else? So it means that all of you are okay. The silence means that my students are okay.
Hello.
Yes, Jane Kasiva Munyao. Yes.
Yes, I'm asking.
Yes.
After the end of this topic 1, will you send us the notes?
Ati?
Will you send us the notes?
The notes are already online. I sent them in topic number 1. Topic number 1 has the notes. I attached them and I've labeled them topic 1 notes.
Oh, it's okay.
They
Thanks.
are there. Yeah. Okay. Any other person?
No.
Yes. Any other person with maybe a question or a query? Or remember, in topic number 1, I had, when I was briefing you on what we had covered last week, I had mentioned this particular person whom we are referring to as the auditor. And when we talk of the auditor, we are talking of an independent person who is appointed by the organization or by the organization to conduct an independent investigation on the operations of a business or the organization, or to give a report on the true and fair view of the organization. So when we'll be talking of the auditor, we'll be talking of an independent person. And the independence, as I said earlier, it's very important because an independent person cannot be compromised. An independent person will give the correct information. He'll give the correct image of the organization. So it is of importance for the auditor to be independent. So anybody who is being appointed as an auditor must therefore ensure that he or she is independent indeed. So let's see this person that we are referring to as the auditor. What do we require of him? Is there anything that is required for this particular person who has been appointed as an auditor? Yes, there are various types of audit, but in our discussion on an auditor, we'll be looking at what we refer to as the statutory auditor. The statutory auditor is an auditor who is a must or whom the law requires to be there for in a company. For the company, it is a must for them to have this person that we are referring to as an auditor or an external auditor. So we'll be talking of such as a statutory auditor. This particular auditor is usually appointed in an AGM, an annual general meeting. And in this meeting, it is the shareholders who usually appoint him. They elect him to be there to take care of their issues. This particular auditor must fulfill some quality for him to be appointed as an auditor. One, he should not be an employee of the organization. If you are an employee of an organization, you cannot be appointed as an external or as a statutory auditor in that particular organization. Therefore, it is a requirement for one not to be an auditor so an employee for him or her to be appointed as the auditor. Number two, must not be someone who does business with the organization. Like, for example, a supplier, a customer, and such. He must not have any such relationship in an organization. The other quality is that he must be a person of integrity. When you talk of an auditor being a person of integrity, he must be someone who will show honesty. Is a person who who is trustworthy, even when he or she is giving coming up with his or her reports. So doesn't talk of that. The other one is that he must be independent. When you talk of independent, we say that this is someone who gives his or her own opinion. It is not someone who waits for other people to give him what to say about the organization. He must be someone who is independent. The other one is that he should be someone who possesses both the academic and professional qualifications. Like in Kenya, for someone to be an auditor in a company, he must be a qualified accountant and a member of a professional body. And this professional body is what we refer to as ICPAK, ICPAC. So that is what is needed for an auditor. Then also he must be someone who is able to express him or herself both in writing and also by the word of mouth. An auditor should be someone who can express himself, because at the end of as an audit process, a report is a must. A report must be provided, and if he cannot be able to express himself both in writing and by the word of mouth, he will not be able to give this particular report. So that's when we talk of that. The other thing is that he must not be a body corporate. An auditor must not be a body corporate. When you talk of an body corporate, it means that he is a person. Not, you cannot appoint a company to do the business, to do the auditing for you. The reason as to why we don't allow company to be appointed as auditors in an organization is that companies will not express their opinion. So, but individuals can be able to express such opinion. So that's when we talk of that. Okay. um, we move on and we look at that is now the attributes or the qualities of a person who will be provided as an auditor. Let's look at the appointment process of the auditor. And I had hinted out that this auditor is usually appointed mostly in an annual general meeting. And when you talk of an auditor being appointed in an annual general meeting, this is a meeting that is done once in a year. For companies which are starting, an auditor can be appointed by the registrar of companies. And when the registrar of companies appoints an auditor, it therefore now means that this auditor will be an auditor for the company till the first statutory meeting or annual general meeting will be conducted by the organization. So that's when we talk of such. So let's now look at the auditor's remuneration. In the same meeting, the auditor is supposed to be given his or her, they are supposed also to discuss his or her salary and all the remuneration that the auditor will be getting from the company. So that's when we talk of that. So it's in the meeting, the auditor can the AGM, the auditor can also be able to discuss the remuneration or how he'll be paid. Let's now look at the rights and duties of an auditor. And we start by looking at the rights of an auditor. What rights does an auditor have in an organization? Number one for the rights of an auditor is that the auditor is supposed to be the auditor is supposed to be given a notice of a meeting, and he should be given a chance to attend such a meeting. It's the right of an auditor to be given a notice of any meeting that is being done in an organization, mostly the general the AGM, and also to be given a chance to talk to the shareholders in such a meeting. The other right of an auditor is that the auditor has a right to be given access to the books of account of the organization. Yes, an auditor should be given that leeway to go through the books of account of an organization, so as from the books of account he will be able to form his or her opinion. So he should not be barred from accessing any books of accounting that which according to him they are important for him maybe to form an opinion from. So that is it on that particular case. The other one is he has the right to require from the officers and the employees of the company any information and explanation deemed necessary for the purpose of the. Yes, the auditor has the right to seek any information from the employees of an organization, uh, any information that they find or they think it would be necessary for the audit process. So that's when you talk of that. So they have that right to ask the employee any question that is necessary for the audit process. Another one is that the right to send representations to the shareholders in case there are some attempts to dismiss them through by to dismiss them through the directors. So if in case the directors or the managers of the organization want to dismiss the auditor illegally because the auditors are appointed by the are appointed by the by the directors, sorry, by the shareholders, and the shareholders who can remove them in an AGM. If they are if there is a plan to remove them unceremoniously from their occupation as the auditors of the organization, they can send some representation to the shareholders and inform them of such a decision so that the shareholders can revert such a process. The other one is that they have the right to legal and technical advice. An auditor, sometimes they may audit some information that they may not have the technical know-how on how to interpret maybe some information. And therefore, they have the right to inquire from any technical person. Like, for example, an auditor appointed to go and audit an engineering firm, and there is some engineering techniques that they are not able to understand. They can do so by they can uh, maybe seek an opinion or the concepts. If maybe there are some contracts or some statutes that they cannot be able to understand, an auditor has the right to go maybe to a lawyer who will interpret such contracts or such laws to them in a better way. So that's when you talk of the right to technical and more maybe advice. The other one is right to remuneration. When you talk of right to remuneration, is that the auditor have the right to be given to be paid out audit fees when they are due. They have the right to be paid the audit fees. So that's when you talk of the right to remuneration. Anytime the auditors they are in need of their audit dues, they can claim them at any time. That's when you talk of right to their remuneration. They should be paid even at in a good time. So those are some of the rights of the auditor, and therefore now we can look at the duties of the auditor. What are the duties of the auditors? Because they have now been appointed by the shareholders, what are they supposed to do? Number one is that duty number one is to report to the shareholders on the fair view of the financial true and fair view of the financial statements. Yes, the auditor should report to the shareholders on how on how the organization is being led, what is the appearance, what is the structure of the organization in terms of its performance. They will give that. The other one is that to state in his report whether they received all the information and explanation according to his or her opinion. Yes, an auditor has a duty to explain in his report whether in his opinion, whether he has received all the information required or not. So that's when we talk of such. The other duty of an auditor is to assist investigators into the company's affairs by providing his or her working papers. In case there is some investigation that is taking place in an organization, the auditor can provide his working paper to these particular individuals so that they can be able to get more information. Like you've ever heard of the scandals in the government, like the NYS saga, you've heard of Triton saga, the Golden Bags. The auditor's information is usually important. And in some cases, it is the auditor who usually unearth such scandals. So they will be very vital when it comes to the investigation. The other one is that to certify the profit and loss account as well as the balance sheet in the prospectus and other statutory reports regarding the numbers or regarding the numbers and the shares sold by the company and the cash received in respect to the allotment of the shares. So in case the company wants to issue some shares to the public, there is a document that they usually write, and this document is called a prospectus. This prospectus, for it to have that credibility or for it to have that particular to be perceived in a better way by the users, an auditor is supposed to certify those particular documents. When he has when the auditor has certified those documents, it now becomes better, and there is some added validity to these particular documents, and thus they can be used in a better way. So that's when we talk of that one. So they'll be more credible with the auditor's certification. The other one is that he has a duty to consider if any information in the auditor's report is inconsistent with the financial statements of the organization. If if the director's report is at any given point inconsistent or not accurate, the auditor can raise maybe a point through in his audit report or in a meeting and says such a maybe there is some information that he or she is finding not consistent with what he has seen with with the organization, because sometimes the director's report will be given to maybe exonerate them from any blame or to show they are working for the interest of the shareholders, which which might not be the true case, and therefore the auditor has a duty to report such a case if to report if that is the case. Okay, those are the duties that of an auditor, and we let us now look at the process of acceptance of a client acceptance procedure. So we say that the auditors are appointed in an AGM. Which process do they usually follow to accept such an appointment? Once they have been appointed in an AGM, which way or which route do they take to accept such an appointment? Number one is that they should ensure that he or she is professionally, legally, and ethically qualified to act as an auditor of that client. Yes, once the auditor has received the appointment letter from a client, he must ensure that he is qualified to act as an auditor of that particular client. Yes. Number two is that he must ensure that he is not a servant or in partnership with a servant of the company. So what that means is that the auditor must ensure that he is indeed independent. Because you remember, we say that of great importance in any audit, independence is very important. The independence of the auditor is very, very important. The other one is that to establish whether his firm has technical proficiency to take the audit. The auditor must scrutinize himself or herself so as to ensure that he is capable to carry out the audit. When talk of to technical proficiency, this is know that he has the number of staff, he has all that is needed to carry out the audit. The other one is that seek references about the status of the company and its management so as to assess the potential risk in associating with the prospective client. Before the auditor is appointed, if the auditor gives a wrong information, he'll be held liable for the misinformation that he has given to the members of the public. So before accepting the appointment, he must ensure that the risk is worth taking. Because, for example, at times, an auditor may be appointed in a company that has a lot of scandals, a company that it's not worth maybe undertaking maybe auditing in. So he must ensure that the risk is worth maybe taking. And that is done by assessing the client. And one way of assessing the risk of a client is by maybe asking the former or the previous auditors and get to know how how risky the client is. So that is it on that particular point. The other one is that the other one is communicate with the present auditor and ask for permission from the prospective client to communicate with the outgoing auditor. So for the client to have a smooth transition, for the auditor to have a smooth transition to the new client, he must communicate with the present auditor or the outgoing auditor so as he can get information concerning the client, or so that he can be able to understand the client who has offered appointment for him. So that's when we talk of that. Then let's look at a very vital document at this particular stage of appointment of an auditor, and we shall look at what we refer to as the letter of engagement. When you talk of the letter of engagement, this is a letter that is written by the auditor before commencement of the audit. And this letter is a show of or shows that the auditor has accepted the appointment as an auditor for the client. So let's look at the purposes of this particular letter of engagement. Why is this letter of engagement issued? Why is it important? One, it helps to avoid misunderstanding in respect to the engagement. So in this letter of engagement, the auditor usually makes sure he has written well, or he has noted well the areas to which he will be covering, or his work will be covered. Number two, it is a sign of acceptance of the appointment. Whenever the auditor has written a letter of engagement, it shows that he has accepted or what the appointment. Number three is that the auditor confirms in writing any verbal agreements between the client and the auditor. Maybe in the process of engagement, there is some verbal agreement that the auditor goes or gets into with the client. So this particular letter of engagement now ratifies or um, now converts the oral agreement into a written agreement. As you know, a written agreement is better than an oral agreement. Even in a court of law, it is admissible than the oral agreement. So it makes such an agreement even more formal, or there is a record of such. The other another purpose is that the other purpose of this letter of engagement is that it provides the auditor with a medium through which he can clarify the clients and his respective responsibility. Through the letter of engagement, the auditor has a medium through which he can confirm his responsibility and that of the client. The other purpose of the letter is that the letter informs the client of other services that the auditor's firm can provide. For example, taxation or consultancies. Apart from auditing, the auditor's firm or the auditor may be providing some other services. So the engagement letter gives or informs the client of other services that these auditors can provide. So that is it. The last one is that it minimizes the liability of the auditor to the third party. By giving out or by issuing out a letter of engagement, the auditor usually clarifies areas through which he is liable. And therefore, if a third party suffers a loss outside the areas that the auditors had indicated clearly, the auditor will not be liable. So it's an easier way of minimizing the auditor's liability. So that is it with the engagement letter. Are we still together? Up to that point, do we have a question or a query or maybe a point that someone has? Are we
Yes, I have a
together?
question.
Yes, which is the question?
Based on statutory auditor,
Yeah.
can shareholders be determine the scope of the audit?
But can shareholders
Can shareholders determine
shareholders
the
do what?
share?
Yes,
Yes,
they
can you hear?
yes, they can
Okay,
determine the scope. Yes, they can
they
determine the scope
and what of the reducing of the provision of the acts?
during the appointment. Yes?
Yes.
Yes, Karen? Repeat the question again.
Okay.
Yeah?
Okay. Can shareholders determine the scope of the auditor's work?
Yes,
They can.
they can. Okay,
Okay,
anybody else now? And I had yes, Karen, you're not done. Yes, Karen?
yes, I was asking after determining that the scope of the auditor's work,
Yeah.
can they reduce as per provision of the same act? Yes.
Can they do what? Can they
Can
we,
reduce prov-
yes?
can they reduce the provisions of the same act after sasa the determining of the scope?
I can't I can't get to the second question. Can they do what?
Can they reduce it as the provision of the same act?
Reduce what?
Reduce the
Would you mind
provision.
maybe please light your question on the public chat so that I can understand it better? Please light it on the public chat. I'll see it. And on left, please light so that I can be able to get the question. Yeah, please do that. Yes, Lona Wanjiko, I had seen your mic on.
I was
Lona,
asking. I was asking
yes,
about
yeah,
the other services that the auditors perform.
yes.
Isn't it the major work that they are employed for, like that taxation or something? Yeah.
Isn't it what?
Isn't it the major work why they are employed to
Repeat,
do?
repeat
Uh,
the question.
In that point where you said that the letter of engagement
Yeah,
is used to
yeah.
inform the client on the other services that the auditors can perform. Mhm.
Provider. Yes.
Okay. I'm asking,
Unalizia hit on your network. Yes.
nauliza
Yes,
hizo
yes, yes.
hizo other services zenye huyu auditor anaandika kwa hii letter of engagement, hizo services hizo zenye ameandikwa afanye.
Yes, Diana.
Hmm?
And there is a problem with the network, so unakatika, sikusikii vizuri. Yes, would you
Okay.
mind maybe public
Okay, sawa.
chat? Yes, use the public chat so that I can get your question. Any Mercy, there is none. I think the silence means says there is none. Musioka Faith. Musioka Faith, any question? Faith Nganga. Yetao Kamumbu. Jane Kasiva. Who else? Ombabia Osembe. Okay. Helen, I'm still waiting for your question. Still, Lorna, I'm still waiting for the question. And negligence. It's my hope that you've gone through a law class and you've come across this word negligence. When we say someone is negligent, it means that that particular person has failed what he's supposed to do or has acted in a way not expected. Like, for example, there is the conduct of a lecturer. If the lecturer does not conduct himself or herself in the expected way, in that in that particular case, he is supposed to do or how he's supposed to behave or to act. And therefore, the auditor's liability, let's now look at now the other part on what the auditor's liability is. We've said that we've looked at negligence. So what is the auditor's liability? When we talk of the auditor's liability, we are saying that this is a chance of the risk, or rather the risk that the auditor carries to either the third party or any other user of his information if he acts negligently or he does not give the true and fair view. And as a result of him acting negligently or not giving the fair and true view, the people who are supposed to use his work suffers a loss. What do we mean by that? Like, for example, an auditor is supposed to present the report to the shareholders. And based on the report the auditor has come up with, the shareholders uses the report and maybe they invest in a firm that maybe leads them to suffer losses or they incur losses. So as a result of such, we can say that that he will be held liable, or he'll be required to compensate the shareholders or the investors the losses that they have incurred. That's when we talk of the liability of an auditor. The liability of an auditor thus can be classified into three categories. Number one is civil and criminal liability. When we talk over civil liability, this is where the auditor breaches his position of trust and confidentiality. though the auditor has the right to access of any information that he wants in an organization, if he discloses that information to the third party, and in this case for his own benefits, he will be held liable under civil law, or he will be held liable under he will have had what we call a civil liability. So that is it. The other one is a criminal liability. This is where the auditor willing free makes a false statement in a report. This is where an auditor knows the true financial position of an organization, but for reasons known better to him, he does not provide the correct statements, or he does not give the correct position in an organization. If he does so, he will be held criminally liable for the misstatement or provision or for giving a false statement. Number two, classification of auditors' liability is what we refer to as liability to the client company under the role of contract. When an auditor agrees to act as an auditor for the company, there is a relationship that is established, and in this case it is a contractual relationship that is established between the auditor and the client. And so there are terms of this particular contract. If at any given point this auditor does not work in accordance to those particular terms that were laid between him and the client company, he will be held liable. If he does not conduct as per the expectation, or he contravenes the contract, or the way he was supposed to conduct, he'll be held liable under the law of contract. So that's when we talk of the liability, or the liability of to the client under the law of contract. The last one is what we refer to as a liability to third parties under tort or negligence. You know, apart from the company, there are other people whom the auditor is supposed maybe to give information to. And if at any given time, a third party company and the auditor was responsible to that particular person, and as a result, that third person suffers loss as a result of using the auditor's report or information, the auditor will be held liable under the law of tort or negligence for maybe his misgiving to the third party. So that's when we talk of the auditor's liabilities. Very fast, let's now look at ways of minimizing the auditor's liability. I can hear a certain mic which is long on. So is that a question? Who is that? That is Jane Kasiva. Are you raising a question, Kasiva? Jane?
Yes.
Are you raising a question? Yes?
No. No.
Sawa. Okay. Let's now look at ways of number one way of minimizing the auditor's liability is by avoiding being negligent. Yes. One way of minimizing the auditor's liabilities is by not being negligent. That is by doing what you are supposed to do and doing it well and not omitting anything. That's one of the way. Number two way of reducing or minimizing the liability is by adhering to the codes of professional conduct. Yes, there is a professional conduct that explains how an auditor is supposed to conduct him or herself. When he adheres to those particular requirements, he'll minimize his liability. The other one is by defining in the audit report the precise work the auditor has undertaken in the report so as to minimize his risk. When he's giving his report, he should indicate precisely or clearly that I did my work in the following areas. Like, for example, an auditor can say, I only audited the data. I only audited the creditors. So uses the information, but he maybe relied on the information on assets, other assets other than the debtors. The auditor cannot be held liable because the area that the person used the information on, it's outside the scope handled by the auditor. That's it. The other way is by agreeing with the client duties and responsibility of the auditor. Yes, one by C and are the duties and responsibilities of the auditor or what the auditor is supposed to do. The other one is that by identifying the authorized recipients of the reports in the engagement letter and in the report. Yes, the auditor should also state clearly in his report or in the engagement letter that my work can only be used by the following, and he indicates them clearly such that there will be no one other than the ones whom he has indicated can use his work. And if they use the work and they suffer a loss, he will not be responsible. The other thing is by advising the client on the in the engagement letter on the need to ask for permission before using the auditor's name and withholding such a permission when appropriate. Yes, the auditor can also minimize his liability by indicating in the engagement letter that whenever anybody wants to use his name or the reports that he has come up with, he must seek for permission from the auditor. And if he finds this necessary, he can withhold such a permission, such that if an individual suffers a loss as a result and he was not given any permission by the auditor will not be held liable. That is it on that particular case. So that is the auditors and the auditors the auditor and the auditor's liability. So um, professional ethics. Let's look at the last bit that we shall look today will be the professional ethics of auditing profession. What are the professional ethics or all that govern the auditing as a practice? Number one is integrity. Integrity is very key when it comes to auditing. You remember I said in the beginning that the auditor's word is taken like a gospel truth. So this person who is appointed as an auditor, he must be a person of integrity, not someone whom you can compromise, not someone who can tell lies, not someone who can say what he, integrity is saying what you believe in. So an auditor should be that person when he says it is one, it is exactly one. That's when you talk of it. So that is one of the professional ethics. Now, number two is professional independence. An auditor must present, and I remember insisting on this. The auditor must show independence or must practice independence in his or her opinion. Any point that he gives must be a end point. Should move away from anything that compromises his or her integrity. So, sorry, not integrity, in independence. So he must be independent in need, indeed. So that's when we talk of that. The other thing is confidentiality. According to I remember telling you that the auditor is given the freedom to check anything, any information concerning the organization. But once he has an access to such information, he should not let it out to anybody else. He should confide the information to himself or herself. That's when you talk of confidentiality. He should keep the information to him or herself. The other one is technical competence. When you talk of technical competence, is that the auditor must ensure that he is competent in work in terms of one, the education requirements, the other thing in terms of maybe staff and the staff required to carry out the auditing process. So that is what the professional ethics that guides the auditing. So that marks the end of that.